Hi there. Yes, we're keeping our eye on the market. So right now things are pointing to a lower open. That's where futures are pointing, but it has been fluctuating quite a bit. We've seen some actually futures for one moment in time were looking up, but now they're pretty stable back at lower. So we're going to have to keep an eye on it. I think it's a little early to call this a full-blown proper bear market. What we're looking at right now is more of a correction, and we absolutely will be keeping an eye on this and seeing how it develops throughout the day.
But what can you say about the signs of this probably being a correction?
Well, given that stocks and assets were valued so high for a while, this is a correction. I mean, it needed to happen. Things needed to level out. And we're seeing that right now when you see these prices. Because if you look at it on a percentage basis, the drop, the number, while it is large, it's the largest for one day in terms of points, we were at 26,000. So it's actually only 4.6% in terms of the percentage drop for the market overall, which isn't even in the top, I believe it's 20% of the lowest drops in a single day. So again, correction, not yet bear market. It's a little early and premature to call it that full blown, but it is something to absolutely keep an eye on.
Okay, this is said to be a reaction of a rapid rise in interest rates and inflation expectations. But what do you think about interest rates going forward?
It's interesting. The Fed has been raising rates, and they've been doing this ever since quantitative easing came in and they had to lower rates and get more liquidity into the market. Now that that's happened, we've seen a steady rise in rates the past couple of years, and this obviously has been a good thing for the economy. The underlying fundamentals of the U.S. economy are relatively strong right now. However, a really rapid rise in rates could have to do with the fact that we saw wage growth go up so much, and when you see wage growth go up that much, you have inflation concerns. So obviously the Fed is walking on a tightrope, as they always do, and they're trying their best to keep things in line in order not to make things too frothy or lack thereof. So again, a tightrope, and we're going to keep our eye on what the Fed does next week and see how that works out. But we are expected to see continued inflation rates, and it will be Janet Yellen's last meeting, I believe, before a new Fed chair comes in. So we'll see how she reacts to all this, and I think that we can anticipate a continuation of increased rates.
Okay, what can you say about the algorithm and robot trading? What are the effects of that now when the market is like this?
Yes, it's a really good question. You know, quantitative traders have been around for a long time, and what happens is they're obviously algorithms, so they're programmed to react a certain way given certain data that goes into them. So when you see this big sell-off, they need to react by buying or selling, whichever way they're programmed to do, which is why you see these numbers jump so rapidly and so quickly in such a short period of time. Then they correct. But yes, that is a reason and a contributing factor as to why we're seeing these numbers so large, larger than what we would expect if it was just an individual doing this from their computer or placing trades through a brokerage house or a bank doing that. So the effects of quantitative easing, of quantitative algorithm robot trading are there, and it's something to be cognizant of. But again, they are programmed to work themselves out as well.
And Donald Trump has taken credit for the big run-up in U.S. share prices during his presidency, but he has not commented on Monday's fall. What do you think of that?
It's an interesting situation to be. He has said, his administration has said, that the market will be a direct report card of their performance, and that's a big thing to say if you want to tie your entire presidency to the flows of the market. As we all know, it does ebb and flow. They are saying that this big drop in stocks is actually just a one-day thing and not to get concerned, but we need to keep a very close eye on what happens on the markets today and see how they react, and we'll be keeping our ear to the ground as to what comes out of the White House as a result of this.